My friends, what is going on? Happy Sunday to you. Hope Thanksgiving was amazing for you. Hope you got to spend a lot of time with friends and families and your loved ones. We got the market reopening for a normal week beginning on Monday. So I put out there on Twitter that I would go over some charts if you guys wanted me to. SPY and Aapl and AMC were the ones that I saw coming up the most. So I'm going to kind of talk about those charts here for a little bit. If you are new to the channel, thank you very much. Please like and subscribe. Old dogs, you guys know I love you. Please leave a like, a comment, all that good stuff. Nothing I'm giving you is financial advice. This is just my opinion and my views on the market. I'm just a dude on the internet. I highly recommend you trade your plan. Do the best thing that you possibly can for yourself, your family, and your portfolio, as always. All right. Now, first thing to remember is getting back into this week. So last week was a little screwy with the market being closed, one full day, half day, the next day. And I said at the beginning of the week, volume was going to be really, really low, and it was. So this week we should start to see some normalcy as far as volume. Really, hopefully start to get some actual moves, get to some important levels. Hopefully not too much chop. I know that I looked this up before I made this video. Powell is going to be speaking on Wednesday this week. It's an economic, inflation, and labor market outlook. So be on the lookout for that. Obviously, anytime Powell is going to be talking, then the market is going to be reacting. So first things first, let's start out just kind of, I want to make sure you guys understand my overall view of the market. So this is going to be the volatility index VIX. It's not something you typically perform a lot of TA on, but it is going to be something you want to keep an eye on as far as key levels. So here is where, when the market rallied in March and we kind of had its, first real bear rally or whatever, this is going to be essentially where it topped out, right down here in this, 20 to 18 range on VIX, and then we saw the next leg down, and then we had the August rally, and then we saw the next leg down. So the volatility index is getting to some levels where, two times previously, once it's gotten to this level, then you've had a nasty reversal on it, and that nasty reversal on VIX has led to a nasty push down on the market. Now, just like I'm always, preaching, nothing goes straight up or straight down. There's just key levels that you want to pay attention to, and that's why you got to take it one day, one level at a time. But if we're looking at SPX here, so you're basically coming up to a lot of resistance. I've talked about this a little bit, where essentially we're coming to a point or to a time where I just don't see how the market is going to push a whole lot higher without at least a decent retrace. Now, I am 100% leaving the door open that the bottom is actually in. I don't believe that to be true overall, but I am leaving room, for some possibilities of that. But what you're going to want to see is some real volume, some real buying pressure coming in at some very key levels. And we're approaching those levels. So I'm actually still a little bit short-term bullish. I do think we could push potentially a little bit higher before seeing the next leg down. And I've talked about with my Discord multiple times, which, by the way, real quick plug, I'm doing a holiday special through the entire month of December. Anybody who joins my Discord gets a special price if you join between now through the end of the year. You can follow me on Twitter. If you haven't done so already, please follow me on Twitter, Colin_Gladman. It's going to be the easiest way to keep up with me. I just don't make as many YouTube videos as I used to, but you can shoot me DMs, all that kind of stuff. And the Black Friday special is going to be on my pinned tweet right there. So, sorry, where was I? Let's get back to SPX. So just like I said right here, so when SPX, in the overall market came up right here, I said I'm going to be really shocked if we just blast through this without a major retrace. And that's exactly what happened. That's what we got. I'll bet that came pretty close to a fib level. I haven't even really paid attention. Yeah, basically the 0.5 fib right there. So we're coming up to those levels again. Also, too, we're coming up to basically the exact same levels that kicked off the next leg down from last time. Let me show you what I'm talking about here real quick. So right here was the top in the March rally. So normally you draw your fibs from your swing low to your swing high, but if we do that from the top and we go to the bottom right here, let me just hide this one. real quick so it cleans it up a little bit better. But so from the top of the March to the bottom, this bear rally topped out at the 200 simple moving average and the 707 inverse fib. Shout out to my man Dave Marino Jr. For being the first one to introduce me to the 707 fib and basically showing how key it really is. Sorry, so I mean you can basically see 200 moving average, 707 fib. So where are we right now? Well, we're about to hit the 200 moving average and the 707 fib again. Volume is so as price has been increasing, volume has been decreasing. Now, once again, some of that, yes, was Thanksgiving week. However, this price action is looking, very weak to me at this point in time. We also have a major gap down here. So even if it's just pushing up here and then we need a retrace that at least fills this gap, coming down to around, the 382, or I'll bet that probably lines up with a fib. Yeah, so basically the 382. So I think we could see maybe a day or two of push to the upside still, and then I mean we're either going to see chop or we're going to see a push down. I would be really surprised, and I'm once again, this is one of those happy to be wrong, but I would be really surprised to just see us just push through the top of this wedge and the 200 moving average and the 707 fib, especially if we continue to push up here and the volume stays relatively low or weak. Now if we do hit these areas and the volume is massive and really pushes on through, then I'd be looking for potentially bullish, but then we might just need a little pullback to retest that area before pushing higher. So if we pull it over here and look at some exact levels when it comes to SPY, you can see that that's basically right around this 405 area. So I'm actually going to go and let's go into the 15 minute, which also too, guys, I posted a little Twitter thread about this, but highly recommend going and reading that. I don't know why that messed my lines up so bad right there. But if you are struggling with your trading, we're at some key levels right now, so I recommend, if you don't know what you're doing, you should probably be sitting on your hands right now until there's some real clear direction going on. But, just make sure, buy less contracts, buy more time, especially if you're, getting big into options. If options isn't your thing, then cool, totally disregard what I'm saying. But buy more time, buy more contracts. Do yourself a favor. So overall, to me, this is not looking very good or strong on SPY. Normally, I would be very bearish, except once again, I am leaving room for the possibility that this just might be a little bit of Thanksgiving going on. But so like I said, you got the 200 moving average that's going to be coming in right here, hanging out in this 404 to 405 range. So if, even if we do push up on Monday, and we get kicked off right here, and then it starts to spill out, and then, you got to work your way on down. That, to me, wouldn't be surprising at all. And I want to be clear. That doesn't mean that the move is over and the next leg down is here. What would convince me that the next leg would be down is if we do see a rather strong volume, impulsive selling move, okay? That's a pretty large move. If we dropped from 400 all the way to maybe a 390 in one day and the selling pressure was really ramping up, then I'd be pretty convinced that the next leg is going to be getting started. So basically, key levels I'm going to be watching for on SPY is going to be that, like I said, that 404, 405 range, approaching this 707 fib. And if that doesn't hold, then what you really want to see is you're really going to want to be, seeing, either the points, you want 400 to hold, then you're going to want that, 397 range to hold, and then ultimately this 390 level. You're going to want to see that hold, which is going to be this bounce right here. I've talked about it multiple times before, but you had a double top right here at 390. Then that's where it found support right here before continuing to push upwards. So that 390 is also going to be a pivotal range. So these are going to be the levels. The levels that I'm talking about right now are going to be the levels that you would look for as what are my reactions at these key levels? What is the volume looking like? What is like I said, overall, just what is my buying and selling pressure looking like? Is there bad news that's coming out to also justify, the volume that's going on here? Is this, potentially a fake out? All that good stuff. These are all the things that you need to keep, track of when it comes to, trying to make it in the markets, so to speak. So, and if you even look here on a little bit more, this is going to be kind of uber micro, but I mean, you basically got a downtrend going on right here. You had an uptrend that was going, potentially starting to break below that. So, we'll see what futures looks like. Futures open up here in just a little bit. We'll keep track of that going into the market. But, a little bit of Friday, I'm going to kind of say, take with a grain of salt. Now, if we come over here to Apple, Apple's kind of in an interesting spot. So, Apple's been having this, kind of massive downtrend right here that it just can't break. You've got 1, 2, 3, 4, pretty good sized rejections off of it. And it just happened again on Wednesday of this past week. And then, of course, you've got the awful news that's coming out about Apple as far as everything that's going on in China with the workers and the COVID numbers in China and all that kind of stuff. So, what you're going to want to see. So typically when it comes to like these symmetrical triangle patterns, they don't go all the way to the end. So I don't think you're going to see a move, it's just constantly, doing one of these numbers. Typically somewhere around that 20 to 30% of the end of the triangle, you're going to get some direction. Okay. Now, if this breaks down, once again, it doesn't mean, new lows are coming or anything like that. But I do believe Apple, for a large part, has been holding up the overall market. So I've got this fib from the swing low to the swing high right here. Like I said, you can see right here, it's been respecting the uptrend. This is going to be on the 1 hour chart. So you did have the 921 EMA cross down on the chart. If we go over here to the 4 hour on it, you're about to get a 4 hour cross down, which you can tell those are a little bit more. So, if you get a cross down like that, here's kind of, typically the move that you've seen. You get a cross up, you get a nice move afterwards. So anytime you're using EMAs, they are lagging indicators. So I do want to be clear about that. It is a lagging indicator, but it can also give you an idea of, am I going to get continuation? So I like to use EMAs of, potential continuation areas. But if we look at this, from a fib standpoint, so if this doesn't hold right here at essentially right around this, 147.50, then you got to consider that these lower numbers are going to be coming. And if we take, so this is going to mess up the trend lines here, but if we take the extended hours off, you can see that essentially from 135 to 142, there, Apple left a big gap behind. And while you did have the push up with strong volume, if you start to spill out and the selling pressure, starts to ramp up here, then I would imagine you're going to come down here, fill this gap, maybe even potentially look at a double bottom. You can see how much this area right around this 134 has been really crucial to Apple. So if you start approaching this range and the price action really starts to pick up, the selling pressure picks up. So what you would want to see is you might see some big momentum candles, really pushing this thing down, some big old fat candles. But once you start getting to that 134 level, you want to start seeing, price actioning weaken. And what I'm talking about here is, you start seeing, different candles like this. So like this is like a tweezer top right here, another tweezer top. But you're where you see the momentum of the candles, really starting to pull back at that point in time. And then you might potentially catch your bottom right here before moving back up. You could also see it, once again, these key fib levels. But I would imagine, I would be surprised if Apple just leaves this area without this gap getting filled. Now, not all gaps have to be filled, even though majority of them do. It doesn't mean it has to be filled right now. It might be a while. We might see a little bit of continued upside. I'm really thinking, me personally, about 412 is really what I see this move. That would be like the top of this move that we would be seeing on SPY. And you can see this is just where, 1, 2, and 3 times we've been kicked off before. So even if it does push up, if we do push past the 707 and the 200 simple moving average, then coming up here to the 786, right around that 412, is also going to meet up with the big bear trend line. So once again, anybody who's fully bearish right now or anybody who's fully bullish right now, I said this on Twitter, that's crazy as far as I'm concerned, because I do think that the risk reward for bulls, so entering bullish positions right here, I just don't see a ton of upside right now. Where I do see a lot of reasons for people to be taking profits on positions. I do see a lot of people having reasons to start loading shorts and puts, for the downside right here. So it makes way more sense to be bullish than it does to be bearish right now. So for Apple, what I'm going to be keeping my eye on is, does this break to the upside, or does this symmetrical triangle break to the downside? My feeling is it's going to break to the downside, especially when you're adding in all the fundamental news that's going to be going along with it. Plus, you've had Apple talking about lower demand for their phones, and like I said, just the overall situation in China, which is going to be Apple's largest manufacturer. So that's kind of my personal opinion on that. Last one, and then I'll let you guys get out of here. Let's talk about AMC. So AMC is in a bull flag right here. It's had multiple rejections now across the top, which thank you for making fun of them, Twitter. Appreciate you. But we've got this bull flag right here. We've had multiple rejections along the top line, multiple support. Typically how a bull flag is going to play out, when you're looking at kind of basic technical analysis, is your price target is going to be the length of the pole. So if I go, okay, let's look at the length of the pole. Where does that take us on this bad boy? Well, it's going to take us up to around the 382, right around $11. So that would be my most bullish take for this move, as it might potentially get up to around $11. Now, kind of same thing. You got the 200 moving average that's going to be sitting here right around like $9 or so. It's what killed the March run. Okay, and yeah, I know you can go, well, no, Halt killed the March run, that kind of stuff. But it was also right at the 200 moving average, so that's reality too. Back in the August run, this is when I was really particularly bullish on AMC, was when it broke through and it retested, and then it started to push up again. Unfortunately, on that push up, the volume wasn't there. We were all looking at this, from a symmetrical triangle standpoint. So symmetrical triangles, 50-50 pattern, and unfortunately we got a break to the downside. I really would have liked to have seen what would have happened to AMC had Ape not come out. Yes, I was willing to give Ape a chance, but numbers don't lie. People do, right? So if AMC hadn't had the Ape split off, we'd be sitting at essentially $15 right now. And instead, I don't even know. I hadn't even been keeping track of Ape. So $1.22. So now we're sitting at $8.77 combined. Once again, let's go back to the numbers don't lie, people do. This is just my opinion. I'm just a dude on the internet, but Ape, as far as I'm concerned, has been a complete unmitigated disaster. It's brought no value to shareholders. It's only decreased in value. Now, I 100% could be wrong down the future. Obviously, I hope that I'm wrong anytime I'm talking about, a particular company that I'm invested in, regardless of what it is. But it's been a disaster, okay? We haven't seen true buying pressure. There's no option chain to go with it. It's an illiquid stock. It's been barcoding. And it is what it is, okay? So, like I said, just when in doubt, no, it's going to expose the synthetics or anything along those lines. Well, I hope so, but it hasn't. And that's the reality of it. It's sitting at $1.22. You want to talk about reality? That's reality. Ape is sitting at $1.22, and it's cost a lot of shareholders a lot of money, period. Okay? Now, I'm not necessarily sitting here, trashing Adam Aaron or anything along those lines. I do believe he's doing as good a job as he can, but still sitting at $1.22. I'll leave it at that. So, What I would want to see is I want to see this thing break out soon. So you did have another volume push up towards the top where it got rejected. And so if we do not, I told my Discord, like probably Monday, Tuesday of this next week, if you do not see, a curl up and start to see one of these moves happening, then I'm really worried that this thing is going to spill out. I still think my most likely is going to be the gap fill. Now, I'm less likely on the gap fill only because we did get some good news as far as Amazon dedicating money to rolling out theatrical releases. As far as I'm concerned, that shows the validity that movies are here and they're here to stay and people enjoy going to theaters, all that good stuff. So, but I don't want to just constantly see chop in this bull flag. The longer it chops and the longer this bull flag gets, the more likely, in my opinion, it's going to be that we spill out, especially if we do see some pushes up in SPY and we start getting to those key rejection zones in SPY. If this thing's still chopping around in here as SPY is pushing up towards what, in my opinion, would be its top, that's not going to be good. And then that's when I still think that potentially, especially if we see the next leg down in the market, that would be what gives us the 618 touch around the $4.70 range. That's still my most likely, but I would say it's decreased a little bit. I would say back in here, I was about probably 80% I thought it would be what would happen. And now I would say I'm about 65-35, right in that ballpark that it's going to happen. And like I said, still my most likely. So what you want to see is you want to see the push here. And it can't just, it's not the very second that you see one little candle pop over the top and it's like, we've done it. Yes, that is a sign of breaking out. But what you want to see is you want to see a breakout. You want to see the volume pick up on the breakout. Then you want to see a retest. And when that retest happens, you want to see the volume decreasing. And then when it starts to move back up, you want to see buyers wanting to step back into this thing. And then, like I said, then you're going to have to look at, 922 and then potentially a move all the way up to the 382, which would be around $11. And then we'll see where we're at that point in time. Like I said, one day, one level at a time. Okay. I hope this video was helpful to you. So overall, that's what I'm going to be looking for. I'm going to be looking for potential upside in SPY all the way up to around the 412 range. But there's a lot of reasons to think that it might not even hit that. As far as Aapl goes, I'm just basically waiting to see how this symmetrical triangle breaks out. You'd want to see a push up, kind of same thing, just like I talked about on AMC. You want to see the breakout, the retest, and a continued move to the upside. If you see a push down, and then kind of same thing, then you see, so if you see a solid push down, or even if in pre-market it breaks down lower here on Aapl, and then as soon as the market opens, it pushes right back up, but then gets rejected right here around 148 and starts to come back down, then I think you could see a lot more downside in Aapl. I personally would be looking at puts at that point in time. So kind of same thing on AMC. If you do break down, get a test, and another push down, then I think that, like I said, I still think that you're going to see the gap fill. Real quick, just bonus on GME. So GME, you had this push up, and then it came down. Then it started, kind of basically bear flagging right here. GME, kind of same thing in this symmetrical triangle. To me, GME looks a lot weaker. So kind of same thing. If you look at this like a bear flag, then with GME, you've got this push up. You take the length of the pole. Whoops. We put it here. Then that's basically going to take us down to the 786 on GME, which would pretty much take care of GME's gap fill. So as I'm looking at this, GME looks a lot more bearish than AMC does. You guys can see right here that this was leading into the GME split. This was a massive demand zone, and now it's turned into a massive supply zone. It just recently barely got up in there, and so this is the look to me on GME. It's kind of same thing. Even if we did invert this, you'd be looking at, well, this push up and this, and then continuation at that point in time. That's the way I would be looking at it. So, Same thing's true with AMC. I mean, like this, this would make me very bullish on AMC. You know, this would be a very, like, you broke down, now you're getting a small relief rally. So this looks very good, but we're gonna, great setups requires a great follow, dude, right? You know what I'm saying? Only said that a million times before. So, but this is what I'm looking for. I do think AMC looks very good right here. I would love to see a breakout and potentially, pushing up here. You're going to have, you got resistance along the way. It's not going to be a straight shot to $11, okay? But I do think that AMC looks good. So bullish above the 0.5, so call it, $7.21, or excuse me, 23 cents. I'm pretty bullish if we stay above that. Really going to start to get bearish if we get below that or if we chop around a whole lot. So, hope this video was helpful to you. Once again, please like and subscribe, all that good stuff. Much love. I will see you guys in the next video. Hope you had a wonderful Thanksgiving. Follow me on Twitter. Check out the Black Friday Christmas specials for the Discord. And other than that, I hope you have a wonderful week in the market. Make great trades for yourself, your family, your friends, your portfolio, all that good stuff. Don't listen to anybody on Twitter without doing your own DD to go along with it. All right? Make the trades and make the decisions that you think are best for you. Have a good one, my friends. I will see you guys in the next video.